kind of just spluttering along. I think we need to reset expectations. The recovery in China isn't going to be like 2003, 2009, 2016. That's simply because China's growth model and the emphasis on growth has indeed changed.
I have to wonder, what we were just talking about, Kendra Lau from Goldman Sachs. He basically said, look, they're hard pressed to really drop this whole constructive view on China because you're taking a look at valuations. They're not close to the cycle lows yet.
Yeah.
There's just so much extreme bearishness. Is there actually a risk that investors might be missing out on what could be a really big market rebound, in the second half?
Well, that's a contrarian view. And from a stock perspective, when you look at the strong brands and the strong companies, they're expected to do well. Even when you look at that SOE reform in March and the reevaluation or the valuation mix with the state-owned enterprises, it's really positive news. And in fact, the balance sheet of the government, they can add stimulus, tweaking so to speak, both fiscally as well as monetary. I think maybe that property lag is still weighing on investors. And again, when you look at the property cycle, it's different in terms of the recovery because we're seeing more state-owned enterprises in terms of land sales, 70% versus 30%. Historically, the private developers would just rush with their starts. They would use the funding from the pre-sales, project after project. And state-owned enterprises don't behave that way. So I think it's, again, resetting expectations and really understanding the policy drive, which I think we need to be really cognizant of.
Do you think what we're seeing is just a bad point in the cycle, or is this something of a structural shift away from China? Because I look at beyond the mainland and I see a lot of good stories in Japan, India, Korea, Taiwan.
Yeah.
Is this a real allocation away from China, you think?
I don't think you can not be allocated to China, especially when you look at China's position on the global stage, both economically and politically. So I think actually this provides a good entry point or opportunity to increase your exposure to really, really, in terms of a well-run, well-managed businesses in China.
So what I'm hearing them say is that, or this particular woman, what it looks like is that there are a lot of people who thought that China's recovery was going to be a lot stronger than it was. Obviously, I don't think that the economy is going to recover very much, and I don't think it will continue. I mean, I'm just obviously speculating, but I don't think it will continue to grow remotely comparable to like where it did before, just because of the shift in like government. Now there are crackdowns. Now the government's a lot more hostile and anti-business. So I'm still holding my shares, but it's just obviously a lot more disappointing than when I used to own them a while ago, because back then the government was much more optimistic, and I think no one even thought that, like she said, that it would be this bad. But this is a new reality. I mean, things change. So now, knowing that this is a new reality, the question is, like, what's going to happen and what would be the smartest moves to make? I'm not sure. I just know I'm just going to continue to hold my portfolio and continue to hold the stocks that I own, like Momo, Finvolution, Joy, and those kinds of companies.